Thank you. So I'm welcoming you to this evening class, and we are going to look at some topics that financial management entails. Some topics that financial management entail, and we say that financial management has 14 topics. It has 14 topics, and one of the topic I'm going to dictate. One of the topic is overview of financial management. Overview of financial management. Generally, this entails the highlights or what financial management involved. What financial management involved. By that I mean, from the word itself, financial management. Financial management. So when I say financial, that deal with the finances. To deal with the finances. Then the next word is the management. So we are trying to manage what? Finances. We are trying to manage finances because we know that we are dealing with the scarce resources. Therefore, these resources need to be bought using the finance or the money, and therefore you need to know if you are dealing with a company. If you are a company manager, you need to know how you can utilize the income, how you can utilize the money that you have to make sure that your cash flow balances very well. Your cash flow has no problem. Your cash flow has no problem. That is the inflow and the outflow. The inflow and the outflow. So inflow should always be higher. Inflow should always be higher. So next topic is the financing decision. That is topic number 2. Financing decision. Financing decision. Financing decision is our topic number 2. Our topic number 2. Financing decision. So under this topic, you are going to learn how the company or how the structure of the organization is made. You need equity to run that business. You also need debt to run that business. There is nowhere you'll find that a company is being operated, or the operation of the company is being carried out without debt. If someone tells you that I run a company and we don't borrow, that company existing in the next, maybe let's say 10 years, its existence is not certain. Its existence is not certain. So the company, for the company to succeed, they must combine debt and equity. So we shall see how that is carried out. Then we have topic number 3, financial institutions and markets. Financial institutions and market. Financial institutions and markets, where we can borrow some fund, where we can borrow some funds, and also under the topic we shall see the regulatory authority. Then topic number 4, I think this is where now you started. Time value of money. Time value of money is our topic number 4. Time value of money is our topic number 4. So small highlight under that is that the value of the sharing today will not be the same in the 10 years time. The value of a sharing today will not be the same in the 10 years time. For instance, if we can look back some 40 years back, one sharing had a lot of value. You could use it to buy several things and get change. What about nowadays? Does one sharing has value? Nowadays, does one sharing has value in our country? Does it has value? Just compare the scenario. One sharing. Currently, even if you give your child 1 shilling, she or he is going to throw it away, kwa sababu unajua sasa unanipatia hii nini, itanunua nini? 1 shilling has no value. So that means the value of money changes with time. The value of money changes with time. The value of money changes with time. That is topic number 4. Topic number 5. Topic number 5 is a business stroke financial asset decision model. Business stroke financial asset decision model. Business number 5 is a business stroke financial asset decision model. Decision model. And then we have topic number 6. Topic number 6, introduction to capital structure decision. Introduction to capital structure decision. By the way, the general rule for a student who is studying this or who is learning these subjects is that you should put yourself in the shoes of a financial manager. In the shoes of a financial manager. Even when you'll be answering that paper, you will be the manager. Now, all of us are financial managers. All of us are financial manager from now henceforth. Or financial analyst. Because by the end of the subject, you'll be able to analyze some projects to know whether they are viable or not. To analyze some projects to know whether they are viable or not. Therefore, put that shoe of a financial manager. Topic number 7. It is introduction to capital. No, that is 6. Topic number 7 is introduction to capital budgeting decision. Yes, introduction to capital budgeting decision. Introduction to capital budgeting decision. Introduction to capital budgeting decision. This is whereby we shall see how the investors make their decision before they invest in a certain project. We shall see. It's a very, very interesting topic. Topic number 8, financial statement analysis and forecasting. Financial statement analysis and forecasting. Financial statement analysis and forecasting. Let's pause a bit and get a signal whether we are together. At that topic number 8. Topic number 8. So under that topic number 8, you'll be able to analyze the financial statement. The financial statement that you are going to analyze under that topic is the income statement and the balance sheet. Income statement and the balance sheet. You're going to identify, you're going to know whether the company in the next maybe 2 or 3 years will be making profit, or how was the performance of the company in the last 3 years? How was the performance of a certain company, maybe Safaricom Limited, in the last 3 years? So the analyzing of a financial statement will really help you to gain that knowledge. Then number 9, topic number 9, we have working capital management. Working capital management. Some of the element of the working capital, is like inventory, receivable, and so on. Inventory, receivable, etc. So you're going to know or to understand how you can manage your receivable, how you can manage your payables, how you can manage your inventory so that you're able to run your business efficiently and effectively, making the right profits. Topic number 10, dividend decision. Dividend decision is our topic number 10. Dividend decision is our topic number 10. And this topic, you'll be able to understand that we usually, the company or any industry or any organization pay dividend from retained earnings. Pay dividend from retained earnings. Then we have topic number 11, introduction to portfolio analysis. Introduction to portfolio analysis. A very interesting topic, interesting topic whereby you'll be able to learn about risk and return. Risk and return in a certain investment. Risk and return in a certain investment. You'll be able to differentiate or to understand if you have two investment project, and you want to know which investment project is the best, or which investment project will give you higher return. When we say investment project is the best, it's giving you higher returns. It's giving you higher returns, and you also be able to identify whether the project has high risk, whether the project has high risk. But in finance, we do say that the higher the risk, the higher the return. The higher the risk, the higher the return. But it depends with the type of the investment. It depends with the type of the investment. That is topic number 11. Topic number 11. Let's go to topic number 12. That is Islamic finance. Islamic finance. Islamic finance. You're going to learn some of the terms under Islamic finance, some of the good terms that they are used under Islamic finance. You're also going to learn about how they do invest. They do invest. In fact, Islams, they don't believe on interest that is attached on the principal. They don't believe on that. If you go to borrow in the Islamic bank, they give you the money without attaching any interest. But you're going to learn how they do operate and how maybe they gain. How they gain. Sometimes they can tell you the project that you are going to undertake using that money, a certain portion you can share to them, but they don't want to relate any interest to the money that they lend to you. They lend to you. Then we have personal finance management. Personal finance management is our 13th topic. Personal finance management is our 13th topic. Now, when we talk about personal finance, we are talking of your money. We are talking of your money. How do you manage what you earn? How do you manage what you earn? For instance, if I give you a scenario here, say, for example, you are earning a net salary of 50,000, and you are living in Nairobi. So how can you manage that cash to make sure that it sustain you throughout the month before the next pay? How can you manage that cash to make sure that it is sustaining you throughout the month before the next pay? That is what you're going to learn under that topic. Then the last but not the least topic is contemporary issues and emerging trends. Contemporary issues and emerging trend. Contemporary issues and emerging trend. That will be your topic number 14, which will be the last topic for the semester. But it does not matter the order that Mwalimu will opt to use. the important thing is to have the concept. The important thing is to have the concept. So I hope that okay. The last topic, Sauda wants me to repeat the last topic. The last topic we have said that it is contemporary issue. Contemporary issue. Contemporary issues and emerging trends. Emerging trends. With that class, I think I've highlighted all the topics that we are expected to cover throughout the semester. So class, you're going to allow me I can touch something small under time value of money. And touch something small. And then I'm going to introduce you topic number 7. Which name are we given topic number 7? So I want to test you, those who are there last week. I don't know whether you went ahead doing something. Yeah, introduction to capital budgeting is topic number 7. I'm going to introduce to you. But that is after we are through with something small and the topic that you covered. Something small under the topic that you covered. What was your last point? Under that topic? In fact, I will not dwell much on this. This just highlight kidogo because of those who are not there. And this is the backbone. So the concept that I'm going to share with you, please note it very well. Time value of money. As we have said that a shilling today is different, or the value of a shilling today will be different from the value of a shilling in the next 10 years. In the next 10 years, it's not a wonder you find that now in Kenya shilling, 10 shillings will now be like 1 shilling. 10 shilling will now be like 1 shilling. That means whatever that 1 shilling is or was buying, then 1 shilling will not buy. But now 10 shilling will buy the same item. 10 shilling will buy the same item. If a sweet costed us 1 shilling some 10 years back, 10 years ahead, 10 shilling will buy that 1 sweet. 10 shilling will buy that 1 sweet. That is the effect of time. The time period on the value of the currency. By the way, emerging issues, we shall look at things like Bitcoin. Bitcoin. I know you have heard of Bitcoin. Bitcoin. Good. So, under time value of money, we are able to compute the present value of cash flows. We are also able to compute the future value of cash flow. We have 2 types of cash flow. Who can give us the 2 types? Or who can mention for us the 1 type of cash flow? We have 2 types of cash flow. who can mention for us one type? One type. Let me see those who are in class. I just want to introduce this all to just give a clear highlight to make sure that all of us are at par. Let's see those who are there. Ama hamkufika hapo. Ama hamkufika hapo. Regular and irregular. Thank you very much. Thank you very much. We have regular cash flow. It's regular or uniform, so that you're able to remember cash flow. And then we have the irregular or non-uniform cash flow. So I want us to discuss something. Thank you so much. This is who? Edward and Celestine. So if I have regular cash flow, if I have regular cash flow and I want to get the present value, which formula do I use? Which formula do I use? Or which discounting factor? Which discounting factor do I use? I have regular cash flows and I want to get the present value. Which discounting factor do I use? For the regular cash flow, we use CIFA. Thank you. Thank you very much. CIFA. And for the irregular, we use PVIF. Sasa niwapeleke pole pole. So PVIFA stands for present value interest factor of annuity. Present value interest factor of annuity. The formula for PVIFA, is, the formula for PVIFA is 1 minus 1 plus R raised to power n, in fact negative n, divided by R, where R, what is R? What is our R? What is our R here? Our R is the rate of return or cost of capital. Cost of capital. N is number of years. N is number of years. N is number of years. Then PVIF, on the other hand, PVIF